Vast Resources is an AIM-listed mining company with mines and projects in Romania, Tajikistan and Zimbabwe. It's raised just over £616,000, and to find out how these funds will be used, I'm joined by the Chief Executive, Andrew Prelea. So, Andrew, thank you. Now, the money owes $3.9 million to Mercuria Energy Trading, $5.5 million to AT&T Investments. £616,000 doesn't seem a lot of money if you're keeping the lights on in your numerous operations as well.
Hi, Sarah. First of all, it's been a while. Yes, no, that's correct. This is really just to bridge the gap between now and when we anticipate the first tranche of drawdown for the new funding for VAST. We've been advised by the incoming funders that the money is forthcoming, and we're just waiting for that. However, we still need to pay salaries. We still have other bills that need to be paid, and this is basically there just to bridge that gap while we're waiting for the funding to take place.
So talk to me about the new funds. Does this mean that a third lender will be added to the books?
No, the incoming funder will be coming in by way of tranches, and that will be in line with the repayment schedule for both Alpha and Mercuria. So the intention is to take them out over the coming weeks and months in accordance to the repayment plan that's been structured with Alpha and Mercuria. So no, there will be one person incoming. The way that will be is still the finalisation of what's debt, what's equity, but they will be coming in, and it's anticipated that there will be at a premium to the price on the day significant.
So tell me about the incoming funder. What's their expectations? What are they going to get out of the deal?
Their intention is to take a strategic position in VAST, to look at the long-term growth of the business, not only in Romania, but also in Tajikistan. That's where their interest lies. They're involved in the PGM business, and they're looking at VAST as an avenue to be able to expand their operations in country, as we are, as you know, the only operators in country at the moment, private operators.
Okay, so I'm just thinking until the money situation is resolved, because Mercuria Energy and AT&T Investments, they've been very, very patient. I'm wondering why they've waited so long to have their debt repaid to them.
It's been very difficult for them, especially with Alpha, as they've got investors within their fund. But they also understand what's happening in the background. They're inside, so they understand. And that's why they've been granting us these extensions as we go, because we are nearing the end of we hope that we're nearing the end of the road to be able to move forward and actually exploit what we have built up in the portfolio, which is still, I believe, highly undervalued. You know, considering what we've got in our portfolio versus our market cap, we really shouldn't be in this position. It's just that, you know, we have no peer comparisons. The market doesn't quite understand it. We're restricted on what we can say in certain jurisdictions. So once all that comes to light, then people understand. Just to put it into context, the incoming investors are also inside at the moment, and you know, but however, everything will be revealed once that investment comes in.
Excellent. Okay, so let's talk about the portfolio. The Bait polymetallic mine. Is this on hold? Because recent RNSs are suggesting that it's even more bountiful than what we had suspected from the outset. You know, is there copper concentrate there, but is it there not being extracted and therefore not delivered to your off-taker?
No, I mean, Baita, look, we've been restricted by funding since day one. We're doing what we can do with the resources that we have. With the incoming investor, that will allow us to basically redo everything properly, and that's the intention of the company, as well as reopening Manaila, which with copper prices where they are also very exciting for the company. So the intention is to bring the incoming investor that will provide us sufficient capital to be able to expand both Baita and Manaila, and also look at other opportunities in Romania, and also to expand the footprint and take up some potential options in Tajikistan, which is also referred to in this RNS, which is an incredible opportunity for the company.
So you mentioned Manailia there. It's a project that you and I rarely touch upon. It's another polymetallic mine in Romania. You're looking to bring that back into production following a period of care and maintenance. You know, how much of a priority is that, or is the focus on Baitaplan?
I mean, with proper funding, it'll be equally as important. I mean, Manaila has a JORC resource of about 5.6 million tonnes of copper, 2.3 equivalent, copper equivalent. The problem with Manaila was, you know, when it was making money back in 2017, when copper was at $7,500 a tonne, then it dropped down to 5.5, 30% of the cost of transportation. Since then, we did all that test work to utilise XRT sorting, which would have reduced the production cost by 40-odd% for transportation. The intention is to actually reopen that as it was, with copper being over $10,000, and then to build a new plant at the pit. But for that, you need significant funding. And with the share price where it is, it's not easy to raise, so we have to find alternative funding. And it's very hard to find people to invest in Romania because of what's happened with Roșia Montană and Eurosun and others. There are no peer comparisons, and people are worried about the jurisdiction. And that's why we are currently the only operators in country, because we've stuck it through. But this country is plentiful, and Manaila is actually, a high-grade copper mine. And in today's market, copper from anywhere is becoming a valuable asset.
Okay, so that's the potential, but what is actually happening in Romania at the moment?
At the moment in Romania, we're mining in Baița, albeit nowhere near where it should be. And that will come with capital, significant capital, to take it up with the drilling that's still ongoing. And people have misunderstood that the drilling campaign was for the JORC right now. But what we raised the money for was for the drilling campaign for the license extension. The documents were submitted on the 12th of May, as they need to be. We're sitting with the National Mining Authority, waiting for the extension of the license, which is middle of August. So we've done what we had to do, and that's where the drilling was, to be able to prove a resource to continue. To obtain a JORC, it needs significant drilling, and that's still another 6 to 12 months of drilling to be able to do. But as we are running on a limited resources capital, and we've got the obligations to Alpha and Mercuria, they are the priority. And to make, once that's refinanced, hopefully with this incoming investor, will be quicker than we hope. We will then be able to undergo a strategic change in Baița, and also to recommence in Manaila.
Talk to me about Tajikistan, because I had understood that Tajikistan was the asset that could provide near-term revenue. Lots of ore stockpiled in Tajikistan. But again, is it a case of the company didn't have the money to get this processed?
No, in Tajikistan, on the Takra plant, first of all, it's the responsibility of the government to operate the mine. And it was their issues. They had their own internal issues as far as their financing obligations. They have an obligation to deliver us a certain amount of tonnage per month of ore. And then we were operating. So there was no capital requirement from VAST into that Takra plant. And that has now recommenced. And we should be looking at shipments recommencing shortly as well on the lead and zinc coming out of Takra. But what's just as exciting, if not more exciting, is the opportunity at Prelea, where we are working on a consultancy basis. Again, no capital required from VAST, where we have a 10% interest of Gulf by way of let's call it a royalty stream on profits. When we went in there with our consultancy firm, we've been utilising the likes of SRK and Manexcon in South Africa, who've done a thorough due diligence. They're actually on site operating the plant. They've finished their mining assessment, which I only received yesterday. But Formin has taken all of the data capture from SRK and reinterpreted it. And under the NAM code, not the JORC, I'm make that clear, that's in the RNS, there's a full report that shows there's about 3 million tonnes of high-grade gold ore. And if you put that into perspective, you're talking that there's a gold resource there even if you take into our 10% of the 49%, that is greater than Pixton Peerless ever was, when everyone was saying what a great asset was, and we had 50% and then 25% of that. And Vast also has the option at a later stage to acquire a further 20% of that asset. Excuse me. So we are in there looking at a world-class gold cluster, and that's only on the one mine, by the way. The other 3 operational mines are being reinterpreted. Historically, that mine is producing around 20-30 kgs of gold a month. The plan is to increase that to 40 to 60 kgs a month on the 4 operational mines, then start the exploration program for the other 9 licenses that they have in the portfolio. And you're talking about a cluster of incredible mines where the average grade is 3.5 grams per ton, and that's just on the one. Some of them grade up to 12 grams per ton. And we'll be releasing those as they are independently evaluated. And so, the intention is for Vast to get in there as an equity partner in the future once the funding comes in.
Okay, but currently, at Prelevka, you've been contracted to develop and manage gold mines on behalf of the owner, Gulf International Minerals. And as you said, you're entitled to 10% of the earnings that Gulf receives. But does it have copper? You're talking about the gold there, and if there is copper, how much, could this add significant value to the project?
While we were on site looking at some of the exploration targets, there was one particular one which spans across 400 hectares. There are 4 deposits within there. There was copper hydroxide at surface in the outcrops there that, when tested, were grading between 3 and 37% in situ of copper. Now, also in one of the current mines, it's the Burgunda mine, which is the biggest contributor to the processing plant, there has been copper in there. They have never, ever extracted the copper. They've never tested the copper. It's high-grade copper. So one of the projects that we're looking at doing is going back into the tailings and extracting the gold from there, which is grading at almost 0.8 grams per tonne in the tailings, which is extremely high. And we are now doing the test work on the copper in the tailings to be able to extract that as well as implementing the processing flotation in the processing plant where they're only extracting gold at the moment. They actually have sitting idle a full flotation plant and to reinstate that. Now, if copper does come into play, that will fall under Vast's remit, and that will be another revenue stream for us as well. So it's very exciting.
So what is going to provide near-term revenue?
Well, Baeta, of course. Manaila, it could be operational within 3 months once funded. Prelevka is already revenue generating, but it's going back into investment. We've already increased the gold recovery by 15%. We actually want to increase that to around 30% by September. There's a bit of equipment that needs to be purchased by the investors, not by Vast. Just make that clear. And that could see revenue streams in the next dividend payment, which is due early next year for Vast, because they do distribute dividends annually out of Prelevka. They've been doing it for many, many years. It's just been very low because their costs were high and their recoveries were low. Once we input, for example, the processing plant's processing 800 tonnes a day, it should be processing 1,800 tonnes a day. Once that starts to come into play, it will be a profit-generating asset for not only the state of Tajikistan, but also for Gulf, which in turn means for Vast. And that could be very near-term in the grand scheme of things.
So, Andrew, what will it take?
And of course, Taco royalties, once the production starts selling, probably this month or early next month, the next shipments will go out, and that's also a revenue stream for Vast.
Just explore that a little bit more. So just assume that someone's watching this who doesn't know what TACOB is.
Well, TACOB is a galena-based mine, so lead and zinc predominantly, but there's also a high content of calcium fluoride. The Tajik government owns a smelter, which is the 3rd largest smelter in the world and the largest in Central Asia. And with the sanctions that are happening now, it's also the only green smelter in the world for aluminium. And they require calcium fluoride, or fluorospar, for the processing of aluminium. So the production of calcium fluoride out of the Takol plant is imperative for the Tajik state. And so what we agreed is that we will be extracting the non-ferrous metals, which are impurities for the calcium fluoride. And from that, CAM, which Vast owns 12.5% of, is entitled to a 50% royalty stream of any lead, zinc, and silver that comes out of that. So it's a royalty-based, effective royalty-based contract based on 12.5% of net revenue coming out of any lead, zinc, and silver sales from Takol.
So, Andrew, what will it take for the company to reduce its dependence on the capital markets? Is it all to do with the historic parcel of diamonds? Once they are returned to the company, will this see you not come into the markets as often to provide working capital at this stage?
I mean, as you know, I can't talk too much about it because of the confidentiality, but we still remain confident that something will happen there. We're in constant discussions, and we believe that we're not too far away. But as I said, I can't say more because I'm restricted. But that is not what we are solely depending on for any sort of recapitalisation of the business. This new funding that we're anticipating will also cure all of the issues for Vast. And if the historic claim comes through, well, that's just the cherry on the cake.
And so why should investors add Vast to their portfolio?
Because as I always have proclaimed, we're extremely undervalued. I mean, we've got an NAV of in excess of 200 million. We're trading at 1% of that. And it's a very limited amount of financial resources that are required as a ratio of what the assets are worth and what they should be producing once recapitalised. So it's a good medium to long-term investment that could bear fruit in the short term once this refinancing takes place, or any good news on the historic claim.
Many thanks, Andrew Prelea, Chief Executive of Vast Resources. Thank you for your time again.
Thank you very much. It was a pleasure.